This is our blog video for May 20th, 2013, and these are our currency indexes, which basically let you see each individual currency as if it was a chart, and you can spot all kinds of different patterns that are continuation patterns, reversal patterns. You can clearly see the trend. You can see the previous day's high in dotted green, previous day's low in dotted red. And when a currency is at its lows and breaks down, it's a trend that's very likely to continue, because it means that for instance, right here at 320, the Canadian dollar became weaker today than it was all day yesterday. And the daily trend's down, the weekly trend's also very much down, and pretty much all the time frame trends are down, and therefore you want to look to sell it, and you want to sell it versus whatever's, probably strongest at that time. You can see the New Zealand is above its previous day's high. It's above its hourly moving average in gray, 15-minute moving average in green. The point of control, which is the position where most traders have positions for the previous day right here. But you can also see that the previous day the point of control fell 48 pips. So this is not necessarily one I would really ideally want to buy. But the dollar's trending down and the yen is kind of going sideways. The daily and weekly trend of the yen is up, and if it breaks above its point of control, which acts as major resistance, basically once that happens, everyone who was short the previous day is now losing money, and it's going to cause some stops to get hit, and usually that's a continuation type of trade where you're going to make money. The euro is the strongest one right here because it's above its hourly, it's above the point of control. The daily and the weekly trend are both slightly up, and so at 4 o'clock the euro CAD makes the most sense to buy. Here's 4:30. And you can see that this, trend did continue up. It wasn't the biggest move in the world. It went up about 12 to 15 pips. During the next pullback, it went up again. The next pullback went up again. You can see later on, as we scroll forward, that the euro really didn't have any kind of continuation, and the CAD, although it broke down, really never collapsed initially. So unfortunately, ideally you want one currency to be exploding up, the other one to be exploding down. When that doesn't happen, you will find small moves of 5 to 15, sometimes 20 pips. If one currency is going up, like let's say the euro, and the CAD was going sideways, then you're going to make probably 5 to 20 pips. If one currency is going up and let's say the euro is exploding up and the CAD's going down, you're usually going to make 30 to 100 pips on the trade. So if you're in a trade, you can see it. If the euro is just kind of hovering sideways, you might as well get out of your trade with a small win, or at least move your stop to break even real quick, because it's not worth risking your hard-earned money on after that point. Let's scroll forward. You can see all kinds of patterns on here. For instance, trend lines. The New Zealand, although its weekly trend is down, the daily trend's up. It's above its previous day's high. It acts as support right here, and it breaks out at 6:30. Which one would you want to be buying it against? Well, the dollar's trend's down for the day. The weekly trend's up. The yen's kind of going sideways. The CAD and the pound are both weak, and if this one's exploding up, they have a very good chance of going down. And if they do, like I said, you're going to make probably 20 to 50 pips. So I would look to sell the pound New Zealand and buy the New Zealand CAD. So let's take a look at those. Pound New Zealand. Let's make sure what we have the time here, a little bit before 7. We're looking for sells, and you can see it fell from around 86.50 down to 86.25, so it was a 25 pip move. New Zealand CAD coming up to 7. You can see this one was around 83.75, and it went all the way up to around 8400, so that was about a 25 pip move. Now, one thing I'd like to share, because I want to keep today's blog video kind of short just because of how late it is. The Perfect Oscillator is a wonderful tool to let you see when the market's at extremes. Typically, when these plus or minus 80 levels get hit or close to, the market's either going to go sideways or reverse. You can see right here it went sideways, here it reversed, this area right here reversed considerably, right here reversed up, right here kind of went sideways, right here reversed up, right here it did fall about 8 to 10 pips and kind of went sideways after that. The perfect oscillator is based on statistics, and it can be used to trade. When you have a trend that's up, ideally you want to see the perfect oscillator come down and hit the -80 level. Very safe place to buy. Or you can also wait for it to get close to or hit the lower Bollinger Band on it, which would be right here, here. You can see it went underneath it right here. We're kind of looking for buys. That one really didn't pan out right here. Nailed that nice little move right here. Nailed that move. So the perfect oscillator is just an amazing tool. Once you know the trend, wait for it ideally to hit the -80 level. Those are some of the biggest pip moves you can get on pullbacks. It's a very safe pullback. When it trends up and it hits the -80, it's basically pulled down too much for that time of the day. It's likely to reverse because the trend's up. And more time frame trends that are up, the better. If the daily, weekly, monthly trend's up, the real-time trend's up, you're really going to have a very high probability trade. Let's look at one more example. And you can use trend lines both for entries and exits. You can also draw your fibs on previous moves. And guess where the market stopped right here in New Zealand? Right at the 1.382 fib target. It's also right at the previous week's point of control. This is where most traders have positions for the previous week. So it's a very high probability reversal area. Notice right here, 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 and here in the Swiss, reversals. These are the only two that hit their previous week's point of control. But at 8 o'clock, if you wanted to look for sells, now ideally the daily and weekly trend of this would be down, even though it would have a counter trend move up. But what currency is likely to go up right here? Because this one's likely to go down. There's really no perfect ones. If the Australian broke out from underneath above its hourly, I'd buy that. The euro was relatively mildly strong earlier and it's holding support at its hourly. So at 8 o'clock, I would consider a Euro New Zealand sell. Now we're looking for sells. We're not going to get in right at this point, but you're basically looking for, I'm sorry, Euro New Zealand buy. I apologize. The euro is likely to go up, or at least sideways, and New Zealand's likely to go down. Here's 8 o'clock. You can see previously it hit at an extreme, and then the trend continued down a little bit more. Whenever these hit -80 levels, probably 70–80% of the time they reverse, but when they don't, the next fib target of that move down almost always reverses. So the fact that the market came down to the fib targets at our lower containment band, and the perfect oscillator is not at an extreme. You have clear divergence right here. This is a very high probability trade, and you can see it went up almost 40 pips over the next couple hours. So whether you got in and out and made a quick 10 to 25 pips, or you held for 35 to 40, using our currency meter, currency indexes, and you can also use and put our currency meter on the indexes for even higher probability. You can see at that time of the day, at 8 o'clock, the euro actually broke down underneath its hourly. So if you're in that trade, you would have basically been trailing your stop up, and you can see it's quite weak at this point. Anytime it hits an extremely weak amount on the next pullback up, you want to look to sell it at any kind of resistance, like the hourly or the point of control. This gives you added probability. For instance, the dollar broke down underneath its previous day's low with a lot of intensity. At 3 o'clock, it's very likely to go down more. The euro, of these four pairs up here, the euro at 3 was above its hourly. It's just mildly strong. But at 3 o'clock, the euro dollar was the best of those four to be looking for buys. And as you can see, coming up to 3 o'clock, we have a nice little wedge pattern right here where volatility is getting smaller and smaller. Usually breakouts of that work. Our currency index plus the currency meter gave it a high probability. And guess where the high was? Perfect oscillator, +80. And it's above our upper band, which is a completely different tool using different statistics. Very high probability place to get out, and if you're an aggressive counter trend trader or you thought the euro was going to fall at the highs, pretty safe place to get out of your trend, buy and sell and make 5 to 25 pips on the pullback.